What are the best bond ETFs to invest in? If you are thinking about retirement and want to know which bond exchange-traded funds to consider, you are in the right place. Let's break down the best options for you. Bond exchange-traded funds are a popular choice for many investors looking for steady income and lower risk compared to stocks. These funds track a collection of bonds, such as government, corporate, or municipal bonds, and they trade on stock exchanges like shares. This makes them easy to buy and sell, and they offer diversification, which helps reduce risk in your retirement portfolio. When it comes to retirement investing, the best bond exchange-traded funds are often those that provide broad exposure to high-quality, investment-grade bonds. These funds are typically called core bond exchange-traded funds. They invest in a mix of United States government, corporate, and sometimes securitized debt. Core bond exchange-traded funds are considered a solid foundation for the bond portion of a retirement portfolio because they offer stability and regular income. Some widely recommended core bond exchange-traded funds for retirement include the iShares Core United States Aggregate Bond Exchange-Traded Fund, which tracks the United States investment-grade bond market. This fund has a large portion in AAA-rated securities and is known for its low expense ratio and broad diversification. Another great option is the Vanguard Total Bond Market Exchange Traded Fund, which gives exposure to the taxable investment-grade United States bond market and is heavily weighted toward United States government bonds. You might also want to consider the Schwab United States Aggregate Bond Exchange Traded Fund, which offers similar exposure at a low cost. The SPDR Portfolio Aggregate Bond Exchange Traded Fund is another low-cost option that tracks the Bloomberg Barclays United States Aggregate Bond Index. If you are looking for something a bit different, the Fidelity Total Bond Exchange Traded Fund is classified as a Core Plus Bond Exchange Traded Fund. This means it has more flexibility to invest in a wider range of bonds, including some higher yield and international debt. The Vanguard Tax-Exempt Bond Exchange-Traded Fund focuses on municipal bonds, which are often tax-exempt at the federal level, making it a good choice for investors in higher tax brackets. When selecting bond exchange-traded funds for retirement, keep a few things in mind. First, look at the expense ratio. Lower expense ratios mean more of your investment goes toward returns. Next, consider the yield, which is the income the exchange-traded fund pays out. This is important for retirees seeking regular income. Diversification is also key. A broad mix of bonds reduces risk. Lastly, think about liquidity, or how easy it is to buy or sell the exchange-traded fund shares. For example, the iShares Core United States Aggregate Bond Exchange-Traded Fund and the Vanguard Total Bond Market Exchange-Traded Fund both have expense ratios around 0.03% and yields near 3.7%. These features make them strong choices for the bond portion of a retirement portfolio. In addition to core bond exchange-traded funds, some investors may consider short-term bond exchange-traded funds for less interest rate risk or specialized bond exchange-traded funds for specific needs, such as municipal bonds for tax advantages. However, for most retirement investors, core bond exchange-traded funds like the iShares Core United States Aggregate Bond Exchange-Traded Fund, Vanguard Total Bond Market Exchange-Traded Fund, Schwab United States Aggregate Bond Exchange-Traded Fund, and SPDR Portfolio Aggregate Bond Exchange-Traded Fund provide a solid, low-cost foundation. Allocating a portion of your retirement savings to these core bond exchange-traded funds can help provide steady income and reduce overall portfolio volatility. This approach supports a more stable financial future as you transition into retirement.